I'd like to show you why knowing your why is the start of your journey. Without a strong why, it can be so difficult to reach your maximum potential. My name is Dr. Jason Balara, and every week I meet with real estate investors and mindset specialists that are taking action in order to build a life according to their own terms. We will break down what drives successful people and allows them to achieve at such a high level. If you are a professional wanting to break through, or simply someone that wants to hear an inspiring story, the Know Your Why podcast is made for you. Hi everyone, I'm Jason Balara and this is the Know Your Why podcast. Today I'm here with Adam Roberts and Emily Cortright. Adam and Emily, they co-founded the A&E Real Estate Group in 2013, and I'm not even going to spill any of the backstory here because I really want to let them tell their story. But first, Adam and Emily, thanks for coming on the show today. I really appreciate it.
Thank you, Jason.
Yes, thanks for having us.
Yeah, absolutely. So why don't you guys go ahead and tell us your story? And I don't know if that you can start before your story was combined or however you want to go. If you want to do it separately or do it in tandem, I'm happy to hear your backgrounds.
Great. I'll start us off. My name's Emily Cortright. This is my husband, Adam Roberts. And both of us are engineers by trade and through college education. And we started our careers at GE Aviation. So we were in the aerospace industry, working in manufacturing, supply chain operations, and really climbing that corporate ladder. I would say I had a very traditional upbringing. The only investing I ever learned about was through your 401k in stocks and mutual funds. I had zero real estate in my family, no real estate investing kind of mentors to look up to growing up. Adam, his dad did encourage him to read Rich Dad, Poor Dad at a young age. And his dad was a little bit more influential, but neither one of us kind of had that real estate bug until about 2012. And we were living in California at the time. And there was a Rich Dad, Poor Dad training that came through. So Adam and I met after work for like a Wednesday night, 2-hour seminar. And they talked about the basics of real estate investing. And I was pretty skeptical at that point because I didn't know anybody that invested in real estate. And to me, that was unachievable at that time. But seeing the numbers, being engineers and knowing numbers, the numbers made sense and the wheels started turning. So we ended up doing the 3-day course and really learned about single family flips, rentals, wholesales, and just looking at the numbers, I'm like, oh my gosh, people make money doing that. Like, this is crazy. So we tried to invest in California. That didn't work out. Real estate was too expensive, even in 2012. And it just so happened that a few months later, GE decided to sell off the businesses we were in. And both of our facilities got put up for sale. We couldn't go back to headquarters. And we were part of the intellectual property. So we were kind of frozen in our jobs. And that was really like the knife in the heart for us, that the big corporations don't really care about you and you're kind of just another employee. And so we started looking around for other opportunities. Adam found another aerospace job in Fort Worth, Texas. And we decided that when we left California and I left GE, that I would start our real estate investing business. And kind of the mindset we had at the beginning was like, well, if it doesn't work out, I'll just go back and get another engineering job. I'll go back to corporate. And so we moved to Fort Worth in 2013. I got my real estate license while we were still living in a hotel, searching like house hunting. And I started flipping houses and buying rentals. And it snowballed. We bought our first flip for $45,000, put $10,000 in and sold it for $75,000. And you're like, oh my gosh, that actually worked. And then we bought our first fourplex and we just kept going. And it's been an amazing journey since then. I don't want to spill all the beans, but I'll let Adam add to that his input. But that was kind of the initial start into our real estate investing career.
Yeah. And I I held the corporate job while we started the business and, kind of brought in more or less the paycheck while we were getting things going. And but things happened pretty quickly, I would say. We weren't like high volume buyers in the single family game. I think we got up to 12 rentals, probably flipped a couple dozen houses, or rehabbed a couple dozen houses, and then realized that if I was going to join Emily full time, we needed to do something different, scale somehow. And in Texas at the time, 2016 or so, things had gotten really, really hot with single family, overpriced, or at least we thought so. And doing investment properties in single family became really difficult. You started to compete with institutional buyers and things of that nature. So we decided to look at commercial real estate in 2017. We attended different events, but the one event that really defined the next several years of our investing was a multifamily investing workshop that was put on by a large investing group here in Dallas-Fort Worth. And we were completely blown away. Again, kind of that next level, similar to the single family weekend event Emily talked about, where we didn't realize people could actually make money investing in real estate. Well, we didn't realize that people could actually make a living, let's say, and quit their full-time job and become a commercial real estate investor or a multifamily real estate investor. And so that was just like, we didn't realize that had the potential to exist. And so we were all in at that point. We said, you know what, that's it. We're doing this full time. We're going to sell off our entire single family portfolio, stop doing those investments, and go full time into multifamily. And that's what we've been doing full time ever since that weekend in 2017.
Awesome. A very cool story, and I think not unlike a lot of people that come from a different background, right? Like, I don't know. I think this is, I don't know, we're getting close to 150 interviews, and it's almost nobody was from, just started out life in real estate. Like maybe two or three of the people. It's like, oh, I was an engineer. I was a tech person. I'm a veterinarian. It's just like random other jobs basically. And then you find your way into it. And Emily, you said something right at the beginning that you were skeptical because you didn't know anybody that did it, or you didn't have that sort of introduction in any way until, sort of Rich Dad, Poor Dad, which is, and I've talked about this a lot, but that's the problem, right? That's the problem. A lot of people are skeptical, whether you're wanting to be an active or a passive investor, people don't know about it. And for whatever reason, it's this super secret thing that doesn't need to be a super secret thing, that, here's a way for you to make money. Even if you keep your W-2 job, have your money, make money, as a passive investor, whatever the case may be. But I'm sure you guys have seen the same thing. Like, you talk to your family, friends, coworkers, whatever, and it's like, everybody thinks it's a Ponzi scheme or so, they think it's some crazy way that's impossible. And it's like, it's not at all impossible. Like we meaning the three of us, we didn't come from some magic, real estate world. And it's like, you can figure it out, you can do it, and you can make money and make a living at this. And sort of if you want to, a sort of uncapped living, basically, you really, really scale it that way. So that stood out to me when you said that, Emily, because of that's the sentiment I receive when I talk to other people about it. And they just seem like it's this unfathomable concept. I'm like, well, it was kind of unfathomable to me a couple of years ago. Right. And to you when you started. So I think a lot of people come from that, but realizing that you can kind of move past those things holding you back and really, do something with it. So you started with in the single family world. And I think that's also pretty common, right? A lot of people are, start with this, whether it's because that's what we think we're supposed to start with, or it's because we think it's what we can start with, whatever the case may be. And then move to multifamily. So you mentioned, Adam, that you I think you said you had flipped, a couple dozen houses, and you had, did you say 12? I don't remember, like single family rentals. Oh, what span of time was that? Like, how long did it take you to do that?
Yeah, that was in between 2013 and 2017.
Okay. So, 3-4 years to do that.
Yeah.
That's nothing to sneeze at. Like that's a pretty substantial amount, especially I think doing a couple dozen flips in that time, while also, at least one of you was full-time employee. So again, it's like this stuff can be done. How did you, I think that, sort of concept of having one person with a W-2 job and the other person focusing on the real estate and the time involved. How did you do that? How did you, I like interviewing couples and seeing, kind of how they divided that up. And was it always easy? Was it hard to figure out those roles and sort of trust each other in those roles? Tell us a little bit about that part of the story.
So I took on a lot of the responsibility because that was essentially my full-time job. I took the responsibility upon myself to say, I need to build our real estate business. So I got my real estate license. I learned all I could about the contracts and negotiating and the sales process. During that time, we were sending out 1,000 yellow letters a month. So I was the one printing the letters, folding them, stuffing the envelopes, licking the envelopes, putting the stamps on. So it was, I did fill my time. I said, every day it was, what am I doing today to get our next deal? And whether that was driving for dollars, driving neighborhoods where we wanted to buy, it was really, that was my full-time job. Adam did help a lot with some of the back end stuff. He was there on some of the seller meetings with me, just so we could build rapport and for safety too, because you go to these people's houses and you have no idea who they are. But he was more behind the scenes. So I was the one shopping at Home Depot, and he was kind of in the background, double checking my spreadsheets and things like that. But
Yeah, I mean, especially here in Texas, it's probably similar in a lot of states, actually. You have to be careful when you're a licensed real estate agent, what you can and can't do with a potential seller of a home if you're going to buy their home instead of, represent them or list their home. So sometimes I would step in on negotiations if we found out that a seller was going to definitely sell their home without listing it, and then to avoid a conflict of interest with the realtor in the conversation, then I would jump in and do some of the negotiating on price and things like that. But, Emily's right. I mean, she single-handedly built that business from the ground up, and, she did a great job at it.
Here we are today.
Yeah. Awesome. So you decided to kind of make that move to multifamily then. And so I think you said you just sold off all of the single family portfolio. I know you went to an event, kind of got that multifamily introduction and education. How did you maybe walk us through that process? Like, how did you make that transition? Obviously it's not like one day you just everything's sold and now we buy multifamily. Like there's got to be some sort of transition there. How did that work for you guys?
Yeah, Emily she was managing the single families. So we didn't have professional property management on the single family. So she was doing that, but we made kind of a complete 180. One day we went from looking for single family investments to not really. And we left that event and said, okay, Emily's going to transition all of her efforts to, what it takes to start building a successful multifamily business, which, at the time when we were introduced to it, really it's a big team sport, right? So it's very evident once you get into the multifamily industry that it's not like single family. You can't necessarily tackle, a multi-million-dollar project just by yourself. So we did obviously a lot of networking and team building and meeting people and seeing if there was anybody that was willing to work with us, a couple of newbies. And I would also say still the single family business, we had that going on. So, managing the tenants and things
Yeah,
like that?
the transition was very natural. Well, the transition was pretty abrupt in terms of efforts. We stopped our paid marketing. There were 18 training modules. So I took the next couple months to really learn the multifamily business and dive into the education. In terms of our portfolio, we still probably flipped 2 or 3 houses after that. And just naturally, as the tenants started moving out of the rentals, we would sell them. And one thing that one story I really like to share is the depreciation on multifamily is very powerful. So in 2018, we sold 3 of our rental properties, and each one made about $100,000 in profit. So we had about $300,000 in gains, and we bought one large apartment complex, 180 unit, that we syndicated with other people. But that large apartment complex put off a negative $350,000 loss from depreciation, which offset all of the capital gains that we had made on our single family homes. And so what we learned back in 2018 was it really opened our eyes to the benefits of multifamily depreciation. And we incrementally then sold off our portfolio. It kind of worked out perfectly. As the tenants moved out, we would sell. So it was like 3 to 4 a year we would sell, and we would reinvest in multifamily in the same year. And then we ended up not having to pay taxes on the gains from the single families.
I love it. I love all of the different ways that real estate can help you, benefit you, whatever you need at that moment, right? It's like, you it's great. You had these single family rentals that you had fixed up, rented them out, like they had increased in equity. Awesome. You make some money there. Well, you didn't have to give away half of that in taxes because you found another investment vehicle that has the depreciation that allows you to kind of and as a realtor, you should have real estate professional status as well, right? So you can, we don't have to get into all of that, but like you can use that against W-2 income then as well as a married couple. So I've had a CPA on here, and we talked all about like I love the real estate professional status thing and like the ability to use that as a married couple too, and have offset things. So I mean, and just I don't know. I think we're supposed to say none of us are CPAs or what.
That's right.
But
That's
basically just illustrating the power of real estate in so many different facets, right? It's not just the cash flow that you're taking home from your tenants. It's not just the appreciation and the gains that you get at that sale. It's not just the tax advantages. Like it's literally all of it, right? So you can use it the way you want to. Because if you as you did, you sort of spaced out those sales on your single family. If you had sold them all in 1 year, you might not have had enough depreciation to write them all up. But you can use those advantages if you're smart about it and the timing to essentially offset all of that taxable income that you would have gotten hit with. So it's a really great strategy. I'm glad that you shared that, because I don't think we've talked about that sort of setup working out for someone, kind of the way that it did here. Mm-hmm. So when you did that, were you investing passively in the syndications? Were you a part of the GP team? What were you doing? What were your roles there?
Well, when we first got into multifamily, I mean, the goal was from day one to be on a general partnership team, be general partners, part of the syndication group, and but naturally, we joined an investing group, and naturally just a lot of deals started, the deal flow was there. And so we ended up investing as limited partners in a few deals.
I think 3.
Yeah. Right off the bat. And that was great learning, right? I mean, we got in with a couple good operators, people who, we're good at reporting and communicating, and we were able to kind of follow along best practices, how those folks ran their multifamily business, and then simultaneously really focused on the correct ingredients and actions to put ourselves in a position to be a general partner on a multifamily deal. So we attacked both, I would say, in parallel.
timing wise, like he mentioned, the passive investments were opportunities came much quicker. So from the day we said we're going to focus on multifamily, it was about 2 to 3 months before we were in 3 passive deals. And it took 11 months for us to get our first syndication closed. So within a year of kind of making that decision and switching to multifamily, we had our first 180 unit syndication.
Okay. Talk about that. Let's talk about how that, how you found it. And I know that first one as a general partner can take a while, right? It really can take, I think, similar to me, like I think the first one was 10 or 11 months, of work, of feeling like nothing's happening. And then, to finally get there. So how did you do it? What was your process and how did that look for you guys?
Yeah. One of the first things that we focused on, like I mentioned, was the education part. So as part of the education group we were in, there were 18 training modules. I got through those pretty quickly because it was my full-time job. And then the second step was really starting to build that team. We went to a lot of different networking events, and we probably had phone calls with 7 or 8 potential co-sponsors or co-GPs. And we did get a lot of no's. We would talk about our value proposition, what we brought to the table. We talked about what we were looking for in a partner, very intentional conversations. And there were some people that said, that's not the structure I'm looking for, or I'm already working with other people. And then we had a conversation that was very natural. It went really well. It sounded like both of us were on the same page. And that phone call turned into lunch, which turned into dinner with our partner, Aaron, and his wife, Maria. We got to meet his wife, Maria, and the conversations and everything was so natural. It felt right. And so we had all the conversations up front, roles and responsibilities, commission splits. How would this work? What are we going to look for? Criteria? Because he was also looking in the DFW market. So we decided at the time that he would focus on 200 units or more for himself, and we would focus on anything under 200 units. And so I would say the partnership aspect was really priority number 2 after education being number 1. And I would say by about the 3-month mark, we had that partnership lined up. And so going forward, we knew any offer we were going to make was going to be us and our partner, Aaron, like our resumes were going to be together. So then we kind of hit the ground running with deal analysis, property tours. Over the next 3 to 4 months, we made offers on about 4 deals. And I remember specifically, we came in second place behind some colleagues. So you have to come from abundance. So I'm so happy they got the deal, but we were still like kicking ourselves because we were like $15,000 off on a $9 million property. And one of the feedback items that the broker gave to us was that our earnest money wasn't strong enough. It wasn't comparable. And so we took that as a lesson learned. And the next deal that we were really excited about, we went strong, super strong on the earnest money. And that ended up being the one that we got. So it was around that 8 to 9 month mark after we made the decision that we got it under contract. So probably the 9 month mark, and then a 2-month close. So we were closed at the 11 month mark. But that was kind of the process we went through. There were definitely some no's when it came to finding the right partner. There were some, no's. We didn't win the LOI, and you just have to keep going and keep trying because you knew it was going to happen eventually.
Yeah. There's going to be a lot of no's along the way. I think that's something for people that coming into this business 100% should realize that you can't, it's hard to not take it personally or not be emotional about it, but like, you really can't, because guess what? You're going to hear no 100 times again. Like it's just, that's how it's going to go. I wanted to touch on a couple of things you talked about. One, I think is super important and probably overlooked a lot, but having those intentional conversations with potential partners, especially in the beginning. And I'm speaking from experience, like you just want to get a deal done. Right. And so a lot of people will get in that. I just need to find someone who can help me get that deal closed. Right. That's what I think that it's not and most people, when they think about getting a deal done, they're thinking about getting it closed. What we're not thinking about is the next 3 to 5 years of hold time.
Yeah.
Right?
Yes.
So what you're not thinking about is this is literally like, I was going to say worse than a marriage. Marriage is not bad, but it's probably easier to get a divorce than it is to get out of a bad partnership in a, sort of a business relationship like this. So hopefully my wife doesn't take that the wrong way. But the point is that it's like, if you're in a relationship that you just can't stand, like that's a marriage or something like that, you can get out not tremendously difficultly. Here there's a lot to consider as well. So you have to think of it that way. You have to think of it as a long-term relationship. You have to think of it as, okay, I'm going to have these conversations that you did, and be as sure as you can that it's someone that you do want to, sort of work with for an extended period of time. What did you do? I mean, how did you come up with that discussion? Like, did you have a list of questions that you wanted to ask? How did you guys decide you were going to approach that? Because I think it's a great idea, but I bet a lot of people are like, well, how do I do that then? So what were maybe some action items in that you took or that you used to help form a partnership that works for you?
Yeah, I think for us, we got really clear with what our intentions were for the partnership, what value we brought to the table, things that we were willing to do and bring and perform. And also it was very obvious to us, and thus easy to discuss what we needed from the partner. Like, for example, we didn't have a multifamily resume, so we wouldn't be able to get a multifamily loan. We didn't have, a huge list of equity investors, so we probably wouldn't be able to do an equity raise very, very easily on our own. And so a few of those items, we just got very comfortable, discussing the potential of the person on the other side of the table helping us with that. But we also got very clear on what we were able to do. And that was, hey, we'll form the broker relationships. We'll do the property tours. We will do all the underwriting analysis. We'll make the offers. Another big one, at least I felt like it was, it helped the conversation quite a bit, was we were willing to put forward all of the financial risk prior to closing. So all the earnest money, loan applications, things that basically drain the bank account. We were willing to take that risk. And I think, that in combination with what folks were seeing us do, because we didn't wait until we had a partnership lined up to actually start the analysis or to start the property tours and I don't think we necessarily pushed an offer across the table until we had a team built. But still, I mean, we were, it's not like we came to our partner and said, hey, we're just willing to ride your coattails. It was, hey, we're doing some major work here and I'm willing to push a lot of money into escrow. So, we'd appreciate, consideration for partnership. And here's the things we're looking for from a partner, which is why we're talking to you. And so I'd say that's, that creates a really intentional, honest conversation between two parties. And like Emily said, the partner's reciprocal conversation was great. We felt comfortable with it, and it took a couple meetings, but it started to really go in the right direction.
Well, I think the other unique thing about our value proposition was that we wanted to do all of the asset management. We had 5 years of single family experience. I managed all the rentals, so I didn't have property management experience, but enough landlord experience, flipping houses, construction experience. Plus we had the corporate education from GE. I mean, we were essentially climbing the corporate ladder, and we have had professional training on leading teams and managing, manufacturing facilities, managing full assembly lines. And so we had the confidence that we could do the asset management. And so that was, I think, a pretty important aspect, because there were a lot of potential partners that we talked to that just didn't have the trust to partner with a brand new co-sponsors and give up the reins on the asset management. So that was really unique. And it took a unique person who met us, got to know us, saw our confidence, our track record, our corporate background, and said, I trust them to be their partner and let them do the asset management. And obviously it was the right partnership decision. But that was something very unique that not a lot of people were okay with, having the more experienced person give up kind of the reins, if you will, to let us run with it.
Yeah, I was actually going to ask you about that because I mean, my assumption was that whoever you were looking for partners that, because you do need to have that track record to get multifamily loans. You do need to have the balance sheet, and like there are certain things that a more experienced person bring to the table that are kind of you can't do without it, right? You can't do a 180 unit deal without kind of that level of track record. So that's actually quite interesting to hear, like that someone was willing to sort of trust you as asset managers kind of right off the bat. It's awesome. It goes to speak for what your I imagine your pitch, your presentation to them was, and kind of what your background was and your confidence behind it. So I think that is a good thing for people to hear too, because a lot of people I think struggle with what is their own value proposition. What do they actually bring to the table? And it's like, it's not that it's easy to find a deal, but it's probably easier to find a deal and then just kind of say, okay, here you go. I found you a deal. Can I just, as you said, ride the coattails, but you're probably not going to learn a whole lot about asset management and the rest of the process if you don't try to really get right in there and be a part of it in some way. So good for you to get that worked out and get someone to believe that you could do it. So what, maybe just kind of go through the next steps. So you got this partnership, you got the deal under contract. So it took about 11 months to close. And that was when did you close?
2018, summer of 2018. Yeah.
Okay. And how is that going? What have you done kind of since then? What's been the progression?
Yeah, no, it's been really good. We actually ended up doing a second deal with the same partner, maybe 10 months after, maybe a year later. And same setup, really. We did a lot of the work, and we utilized his resume to do, we closed on a 208 unit property. So bigger deal, better financials. It was a nicer deal, here in Dallas. And then, I think COVID happened and, of course we all kind of, went through that, focused on operations, made sure the properties had what they needed. But fast forward closer to today, we actually have built up a real estate business with another couple, different partnership since then. And I'd say since 2020 to today, I think we've acquired
on our eighth property.
And just going back to our earlier discussion about building a team and finding the right partners. In this case, we were looking to kind of graduate to nicer assets, things that were, constructed in the 80s, 90s, 2000s. We were looking to graduate to nicer areas, better submarkets, so more expensive properties, essentially, right? Yeah. Better financials, things of that nature. And again, we brought a lot of operations experience. At this point, we had a couple properties under our belt, one of which, our first one, had gone full cycle. And, the other couple that we spent probably 2 or 3 years really getting to know, sharing business philosophies, making sure that it was the right fit. Now we've got a really good team. I focus on, me and the wife of the other couple focus on operations, asset management, and the current portfolio. And then Emily and the husband of the other couple, work on broker relationships, acquisitions, keeping the pipeline full of offers and properties and trying to keep the portfolio going. And it's been a really good experience.
I want to go back though and kind of just recap the timing. So for the first 3 years, it was essentially one syndication a year. It was, one in 2018, one in 2019, one in 2020. And what we learned when we were doing all of the asset management was a great pace for us. And we would implement the business plan, spend the next 3, 4, 5 months focused on that particular property. And then we would go out and look for that next one. And so that was a great pace. But what we realized is that we needed a little bit more leverage. And in order to buy more than one deal a year, we needed to partner have a different partnership structure. So we could split up the operations and the acquisitions. And that's exactly what we did. Like Adam mentioned, he's more of operations, I'm more acquisitions. And we have another couple where we leverage each other's strengths. And it's allowed us to now buy 3 deals a year. And so that's what we did in 2021. And that's what we're on track to do for 2022. So just by, revising our partnership structure and really focusing on leverage, we went from 1 deal a year to 3 deals a year.
It's a fantastic recipe for success in this business. Like, there's a lot of lessons I think that people can learn from you guys in your story here, like just the very intentional nature of what you're doing, right? The forming the partnerships, the pace that you started out with, that I think a lot of people it's hard to get the first deal, then you get a deal and you're like, well, now my deal flow is better. I got to hit this. And it's just like, this is it's a long-term thing. And it is near impossible to scale without sort of bringing in other partners, partners or employees, right? You have to build you have to have some sort of manpower to leverage, right? One way or the other, whether they're, part of your team from an equity standpoint, or they're someone you just hire to your business. And so it's really great to kind of see that, 1 a year and then 3 years. And it's like, you grow that, and then eventually you can do however many you want in a year, basically, whether you're, partnering with, you're leading, whatever it is, there's a lot, it opens up those doors of opportunity. So it's a really great strategy. I think a lot of people can kind of see that and see it's patience, right? I think that you're very patient about what you're doing too, which is not my strength. And so I'm sort of very, very, very impressed and I admire what the way that you're doing it. I think it's really cool. And I will try to implement some of that in patience in my life. So let's switch gears a little bit, just so I don't keep you guys all day, but there's 4 questions I like to ask every guest. Since there's 2 of you, we can answer them individually. And so I want to make sure that we get through that. And so some of it, there will be, I'm sure, some overlap. But first question I ask every guest is based on the name of the show being Know Your Why. But what is your why? And you guys can answer separately, maybe to start, and I'm sure there'll be overlap. But yeah, what is your why? What really drives you at this point?
For me, it's family and it's lifestyle. Ever since leaving for college and getting full-time job, have been hundreds, if not thousands of miles away from family. And even living here in Texas for a period of time, we were pretty far away from family. And, for me, aside from, yes, some of the financial benefits that real estate can afford you, it really is a lifestyle business. And so what does that mean? It means more flexibility with your time. And for me, for us, it's spending more time with family, folks that we spent a lot of time with in first, say, 20 years of our lives, and are looking to spend more time with now that we have a lifestyle business and more time to flex.
Yeah, it's very, very similar. Just the thought of building your own business is something that I never thought growing up was something I would ever do. This entrepreneur mindset, it's still so new, just new to me. And like everything you do during the day, you are building your own legacy, you're building your own business, you're building your own wealth. And it boggles my mind that we're able to do this together and to take the time off when we need it. I think one of the first realizations I had was when Adam joined me full time in 2018, we went on a charity trip to Ecuador for 9 days. And it was the first time we ever went on vacation for 9 days, vacation / intentional charity trip. And we didn't have to ask for time off. And it's the power of being able to do that and still get your, come back and your business is still going. You still have assets. Nothing fell apart. And so just the freedom of, we work hard, and there's nights when we were working last night. We were working at 6 a.m. this morning. So you work when you need to, but you also have that ultimate flexibility of being able to go away when you need to, visit family when you need to, and put those things first in life.
Yeah, I love it. It's a business that travels well, right? Like you just bring your laptop with you. You can go do those things. If you need to check in, you need to do a couple things. Like it's still possible. So it's really a great point of sort of that. It's a lifestyle business. I've not heard it put that way, but I like that a lot. Yeah. Second question, and I'm going to throw a little bit of a twist to this. Typically, I ask every guest, tell us something about themselves that most people don't know. And I want you to answer for the other person. So it can be a special skill, a hobby, something that's maybe unbusiness related, but just something that is maybe people don't know. So I assume that you know each other well, and you can answer this for each other. Anything, whatever you're comfortable sharing.
Well, I'll start.
You start.
So, Adam,
she's got one. She's ready. She's like, me first. I'm ready.
No, I have always loved this about him. He's a pilot as a passion, and not as a career, but it is his passion and his hobby. And one super interesting thing is that he could essentially fly a plane before he was allowed to drive a car by himself. So his mom had to drive him to the flight lessons because he didn't have his license yet. And he was soloing an airplane before he could drive. So he is a better pilot than he is a driver, for sure.
Well,
I know. I was like, there had to be some zing in there to go with this. I don't know if this is maybe this is in the whole world, but I feel like there's a lot of people in the real estate space that are pilots as well. I hate flying. I hate flying because I hate flying commercial. I hate everything about that goes with it. But man, do I desperately want to fly private. And I'm like, if that means me having to fly the plane, maybe that's the way to go. Just get because I could go off on a soapbox about commercial flying, but it is super cool. Like, I think that's an amazing skill to have. So that's pretty awesome.
Yeah. And I love talking about it. So if you ever want to take the conversation further, please reach out. I love talking that stuff. Yeah.
I will. I would love to hear more about it. And now, since you go second, now you get to decide how much you want to pick on her. But yeah.
Well, I think one thing for folks who know Emily either through business or otherwise, but don't really know her, she's actually quite athletic and has played or does play many sports. So folks would be surprised to hear that for much of her life, she was a gymnast, a swimmer, a diver, and now has decided to take up golf. And on the second hole that she ever played, I'm talking she's never been on a golf course before last week, she birdied. So Emily's more athletic than she seems.
I'm a terrible golfer, but I know what that means. And I know that's like, I've done that one time. I mean, I haven't played a lot of golf, but I did that one time ever. I was like, but that's quite amazing. So, impressive skills on both your parts. When people hear this and they want to reach out, how would you like them to contact you?
Our website is the best place, and it's www.ae, like Adam and Emily, aemultifamily.com.
Awesome. Okay. So final question, and be great if you maybe each come up with one, but I always like to ask people, what's a piece of advice you would give to someone who's getting started? They're new to the real estate game, but they hear this, they see, how great it's going for you, and they want to, kind of get started and get in the game.
Just start. Just do something, and I actually, it's interesting because I have a really good friend right now who's thinking about it and thinking about it. He's done this analysis and that analysis, and he wants to meet for lunch tomorrow, and he wants, and I'm like, man, I say, in the 2 years that you've been thinking about it, you could have made like hundreds of thousands of dollars. And you could be well on your way to creating some different, lifestyle. So my advice, even though it's very short, it's got to be calculated, and you do have to be smart about it. You can't just be reckless, but just do it.
I'll add to Adam's, and that's like get plugged in, whether it's a local meetup, whether it's a podcast, even just phone calls. If you're interested in single family or multifamily, schedule a call with us. Schedule a call with some of your other speakers. I think sometimes people are afraid to reach out, but they don't realize we did the same thing. We had to have phone calls with people, and we learned when we first got started. And it's something that we're absolutely willing to pass on and pass that torch and take the time to talk to brand new people who are interested in getting into investing and see how our paths are similar and what advice we can give. So I think just don't be afraid to have the conversations and get plugged in and start going to the meetups and start meeting people and asking questions. And I think like you mentioned earlier, you realize that it's not so far out of reach.
Yeah, that's great advice on both points. I think it's definitely something where you have to take action. You have to do the work, right? It's not just going to fall into your lap. But if you do, and people see that you're taking that initiative, that's how you get to be the primary asset manager on your first 180 unit deal. That's how you do those things, right? Like you literally just spelled it out for people. Like, this is how you do it. And reaching out to people like yourselves that are already doing it is the way to get, to have those conversations. And so I think the real estate space is very much a space of abundance and generosity, with time and things like that. No, you're not going to call someone, they're going to give you a bucket of money, but they might give you, 15, 30 minutes of their time to talk about strategies, which would probably be more valuable to you than a bucket of money. So 100%. It's utilizing that and being, taking advantage of those things and not being afraid to, kind of get yourself out there and do something. So, Adam and Emily, really great conversation. Thank you for sharing your story. Thank you for coming on the show. I kind of loved everything about it. I feel like now I have some things from that I'm like, okay, I'm going to put these things into action. So I love it. Definitely want to talk more about flying at some point as well. But again, thank you. Appreciate your time.
Thank you, Jason. Appreciate it.
We're honored to be on the podcast.
It was my pleasure. All right. Well, with that, we will go ahead and sign out.
I'd like to show you why knowing your why is the start of your journey. Without a strong why, it can be so difficult to reach your maximum potential. My name is Dr. Jason Balara, and every week I meet with real estate investors and mindset specialists that are taking action in order to build a life according to their own terms. We will break down what drives successful people and allows them to achieve at such a high level. If you are a professional wanting to break through, or simply someone that wants to hear an inspiring story, the Know Your Why podcast is made for you.